Fixed income investments are boring, I agree. There is no thrill when it comes to fixed income instruments. You won't feel any excitement or rush of adrenaline. Hi, I am Vaibhav Porwal and welcome to Channel Deserve. In this video, we are going to talk about fixed income investment. Yes, I did admit they are boring. They have limited returns and seem to be losing their value. Fixed income investments are no longer in demand, and you rarely read about this asset class on the front pages of newspapers, unless of course there is a default. Yes, they are a very important part of building an investment portfolio. In fact, they are so important that we at Deserve include fixed income investments in both the integrated portfolios as well as in the alternatives. So let me tell you a little more about fixed income investments. Fixed income investments, or debt instruments as some call them, are financial instruments that offer assured returns along with capital protection. They are unaffected by market volatility and offer a fixed rate of interest throughout the investment period. While we all agree fixed income investments are boring, let me tell you what we like about this asset class. First, fuel for your equity investments. While many think fixed income investments block your money, our view is different. As a part of a diversified portfolio, a fixed income investment gives you the ability to invest more money in equities when markets are down. Most wealth managers dip into fixed income investments when rebalancing the portfolio. This ensures you can invest and participate in the equity markets at lower levels and benefit when the markets rebound. Second, anti-anxiety equal to long-term compounding. Remember how your portfolio nosedived in March 2020 when COVID hit India. I can assure you, if invested smartly, your debt investment would have not been impacted much. Equity markets are impacted by many such situations that lead to great falls and anxiety and stress for investors. However, in falling equity markets, fixed income investments provide a cushion to the portfolio. The overall drop in your portfolio is reduced by fixed income investments as they are not market linked. This cushioned fall when the market crashes is a good opportunity for smart investors to not panic and remain invested. For those who remain invested for a longer period, the power of compounding kicks in and helps you create wealth. Third, there are many different instruments in the fixed income asset class. There are different types of debt instruments over various tenures and across different types of issues. An investor can thus further diversify his or her portfolio in the fixed income asset class as well. And just to give you an idea of the vast options available in the fixed income asset class, here are a few common instruments: bonds, bank deposits, public provident fund, senior citizen savings scheme, post office schemes, national savings certificate, and many more. The fourth and important point is taxation benefits. Many fixed income instruments like the PPF, Senior Citizen Savings Scheme, and NSC give tax benefits to investors. Hence, financial advisors include fixed income investments in a person's portfolio to make the most of the tax exemption and reduce the tax liability. Fifth and the last point, priority during liquidation. In today's times, even banks and big organizations face the risk of frauds. This is where certain fixed income investments like bonds are more beneficial than equity investments. When a company files for bankruptcy and goes for liquidation, it is liable to pay back to its debtors and stockholders. However, it might not have enough assets to pay off both. In that case, lenders of the company, that is those own bonds of the company, get priority over those who hold equity. Apart from the points discussed above, lower risk and fixed interest income are the two most important reasons that fixed income investment should be part of your portfolio. So the next time you hear that fixed income is boring, remember these points and include fixed income investments in your portfolio. In our next video, I'll tell you about high yield bonds and how you can build a portfolio with high yield bonds. Hope you found this video useful, and if you have any questions, please put them down in the comments below and my team and I will address them for you. Hit the subscribe button below and press the bell icon for our next video on high yield bonds. Thank you.